what we take out of the moves today, Julia?
It was quite an unusual day of trade because by around about 2 p.m. we'd only seen about $2 billion worth of stock being traded. So it had been a low volume day, but then by the end of the session we'd traded $5 billion. So that's the best volume day that we've seen for the market in around about 3 weeks. So the market only up by 0.1%. We only had a 30-point range. The volume's very strong. It was all about the banks today. That's where all the action was happening. We saw the financials and the energy spaces really supporting the market. On the flip side, the materials, the industrials, the discretionary stocks, these were all down. And of course, the big move is coming because of annual general meetings being held. We saw stocks like St. Barbara Mines up by 7%. Resolute was up by 5.3%. We also saw Brickworks gaining 2.1%. Harvey Norman up by 2.2%. And Challenger down by 2.9%. All these companies holding annual general meetings today. So that was a big mover of single stocks. And in terms of stocks doing well, we did see Macquarie reaching a 52-week high, so that was nice to see. But on the flip side, we did see Newcrest making another low on the market today. So all in all, a really unusual day, very narrow ranges, just 30 points, but very big values going through the market today.
Julia, what do you put the movements down in the banks to?
Well, the banks, we have seen buying on the pullbacks, and it's been a phenomenal couple of years for the banks. In fact, if we just have a look at performances over the last 2 years, ANZ as well as CBA and Westpac are up a massive 70% over the last 24 months. NAB is trailing a little bit, but it's still up by a huge 58%. So we've seen some huge performances in terms of these banks. And if we have a look at the banks, they've still got a fully franked yield, if you include the franking, of 7 to 8%. So we did see the banks doing well. Don't forget that the banks are going to be paying their dividends soon. They're already trading without their dividends, but the dividends are actually paid out in December. So ANZ pays its on the 16th of December. Then we see NAB on the 18th of December and Westpac on the 19th of December. And that means the money is going to come back to the market and hit the boards once again through those dividend reinvestment plans. And also some of that money probably finding its way back to the market anyway. And that should help to support a Santa rally to year end. Having said that, it's been a pretty good year for the Australian market. We're up 15.5%, but we have underperformed some of our peers. If we have a look at the US stock market, it's actually up 26% in 2013, and Japan has had a phenomenal year, up by a massive 50%. So it does look like the money printing really helping the risk assets in those markets, but Australian investors having a pretty good year too.
Today, Julia, we spoke about a little bit earlier, Aristocrat, they came out with their earnings today. The market seemingly not too chuffed.
We did see Aristocrat coming in on our expectations, $107 million, and that was a rise of 17% for its profit. But the revenue was actually down by 3.5%, and I think that's where it's disappointed because its outlook still remaining quite strong, saying it does expect strong net profit growth in the current financial year. Now, Aristocrat Leisure's shares actually fell by 2.9% today. The North American division was a standout. We saw its footprint expanding, we saw higher sales, we also saw higher average selling price. So a record result coming through from North America. But in Australia as well as the Asia Pacific, we actually saw revenues down by 7%. Now over in Australia it was because we did see some strong sales and one-off sales in Victoria in the 2012 year. And over in Asia we did see Macau and the regulatory environment leading to a bit of a slowdown ahead of some regulatory changes. But altogether a pretty disappointing day for Aristocrat Leisure shareholders, especially given that one of its biggest markets, the North American market, had done so well. But it does look like investors are a little bit concerned about that slowdown that we've seen in revenue for the full year.